Well, happy Sunday, everybody. Welcome to another Logik Live. It's Sunday. It's August 7th. It's Logik Live number 91. I'm going to need the help of the entire audience today because Randy McEntee, I believe, will not be able to tune in today. And so if any mistakes are made, technical or otherwise, I'm going to need you to call them out. Otherwise, I don't know that I could possibly do the show. I want to thank you very much, Jeff. Jeff, I'm standing on the shoulder or sitting on the chair of giants here. You did an amazing job last week. Congratulations. And thank you very much for letting me know the levels are good. Thank you very much, Renee. Hello, Richard. Who else did I see here? Michael Landon is here. BJ is here. David Kreitz is in the house. This is going to be a good one, man. I mean, friends, we're going to talk to accountant David Kameny about how to run your flame business and all that kind of stuff. It's a very important subject. You know, we always talk about the creative and everything, and we talk about the technical, but this is kind of like that third layer of running your own business at home. Oh, good. Randy showed up. Thank you very much, buddy. Now my day is complete. All right, here we go. Logik Live number 91. Hey, everybody. Happy Sunday. Welcome to Logik Live number 91. Let's get this show on the road. We want to thank AJA for sponsoring Logik Live. AJA and Flame together since 2006. And we'd like to welcome our newest sponsor, HotSpring, the future of VFX outsourcing. HotSpring connects you to great artists to get your projects done, making it easier than ever to access the best talent around the world. If you need any help with your project, whether it's roto, paint, support comp, reach out to our friends at HotSpring at www.thehotspring.com. And if anyone needs tech support, give Jack Horrocks a call at jack@flametech.com.au. Whether you need help with your flame, networking, storage, or custom builds, Jack has you covered. That's jack@flametech.com.au. And if you're in the market for anything from Boris Effects, be sure to use the Logik discount code. Save 15% on any Boris Effects product, standalone or subscription, when you use the code Logik-15 at checkout. And while you're checking things out, check out the Logik merch store. It's important to look your best while you make your best. You can get it at logik.tv and click on the merch link. And we'd like to take a moment to thank all of our patrons on Patreon. We could not do what we do without your help. The list keeps growing. We're up to 137 patrons. So we want to thank each and every one of you. If you'd like to support what we're doing here at Logik, get yourself some merch and some exclusive content like the Q&As we do after the show, head on over to patreon.com/LogikTV and sign up to become a patron. All right, friends. Thursday, August 18th is the inaugural Detroit Flame User Group. It's going to be at Flavor at 6:30 p.m. Let's take a look at the lineup. We have Autodesk Fred Warren, Steve Zweig, Brooks Tomlinson, Finn Yeager is going to be in the house, Javi Mendez from Synesys is going to be there, and pizza and beer, I'm told it will be Detroit-style pizza, will be provided courtesy of our friends at Synesys. I want to thank them. I want to thank Renee. I want to thank everybody who's worked so hard to get an in-person user group going. It's an inspiration to us all, and congratulations. It's going to be a fantastic event. And finally, I don't know if you caught Logik Live last week, but Jeff Kyle made his debut as a host of Logik Live. He had Bernd Hildebrand on. It was absolutely fantastic. Congratulations, Jeff. And in 2 weeks, Amanda's going to come on and host a Women in Flame episode. That's Sunday, August 21st. Very excited about that. It's really, really wonderful to have both of you on, helping with the hosting duties, bringing new voices, new perspectives to Logik and to Logik Live. So I want to thank both of you very, very much. And I'm so glad that Randy tuned in just in time for his favorite part of the show. No, not calling out my mistakes, but the announcement of the forum stats for 2022. We're up to 1,169 users. That's up 9 from last week alone, which is amazing. 1.1 million page views. I put a comment in there, Randy, not as a mistake, but as a shout out to all of our friends in Europe who use a comma instead of a period. That's up 60,000. Not a mistake, Randy. That's up 60,000 from just last week. We're up 300 posts to 9,000 posts on the forum and 407 users on Discord. And that is a mistake, Randy, because I believe it was +3 and I accidentally typed 43. So feel free to hang that over my head for the rest of my life. If you haven't joined the Discord chat, please do. It's a great It's another great channel or aspect of the whole Logik experience. We have real-time chat, you have screen sharing, and it's just a lot of fun to hang out there with your fellow flame artists. You can sign up for free at the forum.logik.tv and click on the Discord link. Want to make sure everybody's aware of the new classes, Logik Academy classes we released in 2022. The first one is called Beauty Techniques in Flame. It's one I put together where I covered topics like blemish removal, cleaning up blotchy areas, red eye and eye bags, texture and color balancing, and all under the umbrella of working as efficiently as possible. Randy gave us 2 new installments. One is called Machine Learning Time Warp, where he goes into that wonderful gift that Andrei Toloshny gave to the community, the Machine Learning Time Warp tool. Randy goes over installing it on Mac and Linux, on different flavors of Linux, different GPU options, and kind of walks you through all of the installation pitfalls, and then takes you through all the different features. And Randy also did one called Setting Up PyBox. PyBox is a feature in Flame that allows you to incorporate Flame into a pipeline. And Randy shows how to hook Flame up into Nuke, so you can have the 2 apps working together. We have some new Logik Academy installments coming up for you either at the end of this month or the beginning of next month. We are working very hard on them. And these are our current offerings: Connect to Conform, the Image Node, Intro to NDI, 8-Minute Aces, and then the 3 I just mentioned. They're all available for free at logik.tv or youtube.com/logiktv. And we want to thank Autodesk for sponsoring Logik Academy. And just want to give a shout out to Grant Kay. He has some great new content on the Flame Learning channel. The first are some videos to show off the improvements to the animation editor in the 2023 release, and also updates to Python in the 2023 release. And then he released a new Flame capsule this week, which shows how to change bit depths in the color picker or the color chooser. Thank you very much, Grant, for all the hard work you do to get this information out to the Flame community. You could find that at youtube.com/user/flamehowtos, or just search for the Flame Learning channel. And if you haven't already upgraded to 2023.1, please do. It's got some important fixes, and if you want to stay current and have access to the best tools, head on over to Autodesk.com, download 2023.1. All right, my friends, we did way back in the beginning of Logik Live, we did 2 episodes. I want to say they were like 6 and 7 or 7 and 8. There were a 2-parter on how to run your Flame business at home. Randy covered the technical. Renee Tim covered kind of like the business aspects, all the other things other than technical. And that was kind of an inspiration for today. It's no big secret that a couple of months ago I went freelance. And prior to going freelance, I had a couple conversations with my accountant, David Kameny, to ask him things that I needed to know before changing careers and becoming a freelancer, working from home. And so I thought it would be great to have David come on and kind of take us through some of the things that you need to know, answer some of the questions that people have put on the forum. And like I said, David is my accountant. And so when I bring him up on screen, you are actually going to be seeing the view that I see when I go to his office. It's just like being there. It's like living, it's like the Andy reality show. So let me bring David on here. I will unmute and do this. Ladies and gentlemen, boys and girls, the hardest working man in accounting, David Kameny. How you doing, David?
I'm doing great, thanks. How are you?
I'm doing great. Thank you for coming on, and thank you for all the great advice over the years. All right?
Sure, thanks for having me, too.
Totally. So I guess we'll dive right in. First, I just want to remind everybody, if you do have a question that you'd like to ask or a comment, please put it in the YouTube chat, and I'll make sure that David sees it. I guess the first question that I would have for you is if someone is considering, well, actually, let's rewind. Why don't you tell us a little bit about yourself and about your business?
Yeah, I'm an accountant. I'm a CPA. I've been a CPA for a long time. I worked for a CPA firm for 2 years. I've been out on my own since then. And just to let you know, I'm self-employed, okay? Which is really what we're going to talk about. I work for myself. You know, my legal status is different. Yeah, thank you. Before I incorporated, and we're going to get into that, whether it's worth incorporating, what the benefits are, and so forth, I was a sole proprietor, which is kind of what we're going to talk about. So anyway, I've been doing this for myself. I do have employees for 25 years. A lot of small businesses, whether they're LLCs or SCorps or sole proprietors or single member LLCs, are a lot of my clients, and I advise them setting up, giving advice on how to handle not only their business from a business point of view and from a tax point of view, and well, especially from a tax point of view. And during the year, about maybe financial decisions of what to make. And I'm going to say this now. A lot of times when clients call me up and they have a question about their business, the first thing I'm going to say to them, and we'll get into detail about this, is like, okay, let's look at it from a business decision first, and then let's consider the tax consequences, because that's always going to be the case. Tax consequences could certainly play a role in it about what to do, but that's basically what I do. A lot of small businesses, uh, like I said, I do their prepare their taxes and give them financial advice, not investing, but business financial advice.
I think it's wild too that like without naming any names, there's another member of our community who's a client of David's, and it was one of those things where like who's heard of a flame artist outside of like what we do, or maybe if you're like in the circus and you're like a pyromancer or something like that, right? But it was one of those conversations where it was just like what I do for a living you've never heard of before, and then and it was like, oh my God, that it turns out not only is the world like smaller than you think, the world is actually a lot smaller than you think. I've always felt like being a flame artist, being like a high end visual effects artist, is a unique kind of job. I think there's sometimes it's the kind of thing like where we as artists are very detail oriented, right? We're extremely focused on our clients and on our work. But when it comes to things like finances, where you kind of need to be very detail oriented, some of us just it doesn't compute. It doesn't compute. And I know like when I've asked friends who are in different lines of work for financial advice, they can't really relate. We deal with like big capital outlays, like if you need to buy a new computer or you need to lay out money for software, and it's just a radically different business than I think from anything else. So I'm really excited that you're on today. I'm really excited that we're going to talk about this stuff, and I guess we'll dive right in. And I'd say like, what are the most important things that someone needs to consider, or that a flame artist needs to consider when they decide to start their own business or go freelance?
Well, all right. So let's talk about. There's a lot of important things to consider. Now, let's talk about just the difference between an employee, because that's how somebody might retain you, depending on what this company wants to do, or what's called being. You guys call yourself, flame visual effects artists, freelancers, independent contractors. These are all synonymous with being self-employed, as opposed to being an employee. So, and there may be times, certain industries, I know production companies, don't ask me why, okay? I have no idea why. They will either only hire you as as an employee, as a W-2 employee, or an S-corp. I just had this, and I've spoken to other attorneys, and I don't know what the reason is. I don't have any production companies as clients, so I don't know why, but that's what they make you do. But anyway, so let's talk about what an employee is. An employee, obviously, everybody knows. So then we can put that to the side, and then we can talk about the real stuff, being self-employed or an independent contractor. Is if you work for somebody else, you're under their direction. Behaviorally, when to show up for work, what to do at work. How you get paid, and that's going to be a big one. And obviously, how you pay your taxes, and what you can. There's no deductions. There's no tax deductions being an employee. Now, I'm sure everybody's gotten a W-2 where you've seen your pay stub, where there's going to be FICA and Medicare. Let's call it Social Security taxes withheld, federal income taxes withheld, and if you live in a state where there's state income taxes, most of them are, there's only 9 that aren't, they're going to take state taxes out. So your earnings, for example, might be $1,000. They're going to give you a check for $700. The rest are employee taxes. They've taken them out, and they've paid them to either the IRS or your state on your behalf. You file your taxes. It's really just a reconciliation. That, and you may be entitled to benefits, and you cannot make any. You can't claim any business expenses. For instance, if you need to buy a computer, if you need to buy software for this job, you can't take those as deductions because you're not in business. That's easy. Now is you're self-employed. Like I said, a freelance, independent contractor, and I got it. This is going to be a bugaboo with me, and maybe it's not going to matter for anybody else. But sometimes, hey, when I get a new client, Well, how do you get paid? And they'll tell me I'm a 1099 employee, and I got like, stop,
No, you're not.
stop. We're not. No, you're not. There's no such thing. Okay. The fact that you're 1099 means you're not an employee. I know what they mean. But they mean I'm getting paid via 1099. You are a freelancer. You are an independent contractor. Okay, great. You just answered the question. Please don't say employee because there is big differences from a tax point of view. So let's get to the two biggest ones: being a freelancer and not being incorporated. You get paid gross money. That $1,000, if you were an employee, they'd withhold the taxes and you get a net check. $1,000 being a freelancer, independent contractor, you get the $1,000. So the first thing is, so just consider yourself, you're in business for yourself. You are a business. So what does businesses do? They report their income and deduct their expenses. So against that $1,000 or whatever money you earn, whatever expenses you incur to not only earn that $1,000 or even get business, meaning, you could put a reel together or shoot a video or buy equipment and for a job and not get that job, it's still deductible in that year. We got to remember this is going to be down the road. Everything we're talking about is during the calendar year. So those are your biggest things. So people will say, well, I want to be a freelancer because now I can deduct expenses. And I say, okay, slow down. You're right. You're absolutely right. Now, again, we have to take it. It's great that if you do have to incur these expenses, if you do have to buy, you guys are in the tech business. So, everything, there's technology, every 3 or 4 months, you can spend, on a software, on a
Oh, yeah.
computer. It may be outdated. You need to get more stuff. Anyway, yes. So, okay, great. If you do have to spend that money, yes, we want to get a tax deduction. Absolutely. But understand a tax deduction is not a dollar for dollar return. If you spend $1,000, okay, it's good because our tax system is based on marginal brackets, right? Rates. If you're in the 30% tax bracket, you spent 1,000, and I'm going to save myself 300, which is a great thing because I want to be able to do that. But you're still out of pocket $700. So don't people say, should I buy this? Well, that's why I mentioned before. Look at it from a business decision first, because it's not like you're not spending $1,000 and saving $1,000. You're spending $1,000 and saving 300. Do you
Right.
need to
It's
spend
like the bottom of
$1,000?
your receipt when you go to BJ's or something, and it tells you at the bottom, like,
Well,
congratulations, you've saved $150 because you spent $600. Yeah.
which is good. It's good, but don't kid yourself.
Right. Yeah.
That's where you want to be. So that's the first part of being self-employed. The next part is there is an additional tax besides the expenses of running a business. Let's assume we're just freelancers and we're not going to have office, we're not going to hire people, we don't need to consult anything else, we don't need insurances, we don't need rent. Yes, we do need other stuff. But on top of that, there's an additional tax. There could be a lot more, but let's just talk about a freelancer, an additional tax, which is called the self-employment tax. So when I describe the withholding taxes when you work as an employee, FICA and Medicare, there's two different components, but just for simplicity's sake, it's 7.65%. There's limitations on that. On the first, we break it out, but call it 7.65%. The employer who paid you as an employee has an additional expense of 7.65%.
Yes.
So that's on top. When the employer looks at it, well, it cost me $1,000, but I have to pay $76.50 in FICA tax. So it's really costing $1,076. Okay. When you are a freelancer, you are considered self-employed, which means you are both the employer and the employee. Which means what? You're subject.
You got to pay the whole
15%.
15%.
Right.
Yeah.
The 15.3%. Listen, it's not costing you an additional 15.3. It's costing you an additional 7.65.
Right.
So it's great. Yes, I can take tax deductions for that, for any expenses I have, but there is an additional tax to that. So now you can't just automatically say, well, it's always better to be an employee. Well, it depends. And I'm going to say that a lot. There's going to be a lot of questions. And it's going to be dependent.
Every conversation I have with David is it depends.
Yeah.
I call up asking like I want like a yes or no answer. Well, Andy, it depends.
It depends
And
what
it
happens
does.
this year. Right.
Yeah.
It depends what happens. I'm going to just give you an example. Let's say Andy gets opportunities to be, and this is going to, it may not be specifically clear, But like I said, the self-employment tax, part of that, 12% of the 15 is subject to first, let's call it $150,000. It changes every year. So think about it. If you have a job that paid over $150,000 in this calendar year of 2022, excuse me, an employee job,
Mm-hmm.
you've maxed out on Social Security. It's only cost you 7.65% of that. The employer made that. Aren't you now? You're over the limit. So if you have a job that's going to pay you another $10,000 on a self-employment job, aren't you better off taking that? You're over the limit. You don't have to pay that,
Yeah.
right? Because you're over the limit. It's only taxed to a certain point. So in 2022, great, Andy, you've already made X amount of dollars over the FICA limit as an employee. Let the employer pay your portion of the self-employment tax.
Right.
Now, any additional income you have is not going to be subject to it. You're fine.
Mm-hmm.
If you didn't, let's figure out, the best way to do that. Oh, do you have other expenses this year that you can offset it? Because if you have to buy a computer this year that costs $20,000, if you only have self-employment income, W-2 income, I apologize, as an employee, then you're not going to get the benefit of that deduction. So
Mm-hmm.
that's why it's always going to depend, and it's always going to be a moving target. I hate to say that within a
No,
calendar year, there's never
totally.
any absolutes. So,
I think
and
just
another
one
thing
thing
I
I
can
want to.
say,
Oh, sorry, David.
sure,
Just the
no,
one
go
thing
ahead.
I just wanted to just mention to everybody that just kind of in broad strokes that we are talking about U.S. tax policy. We do have some viewers who are overseas, and we are going to. There was a question about overseas, and we are going to get into that. But just in terms of
Mm-hmm.
these kind of broad stroke things, we are talking about like we're not talking about right at this moment New York State specifically or any state specifically. You're talking
We're
just
not talking
about
about
like
any
the
specific.
yeah the federal government. So
Right,
all
right.
right.
So anyway, I just wanted to say it's not, to me, hey, if you have the opportunity, be a W-2 employee, right?
Mm-hmm.
But again, it's going to depend, because just for the FICA tax alone, the self-employment tax, you're not going to have that. But hey, what's the situation? Are you going to have to buy anything this year? Not buy anything? Are you going to have the opportunity? Can we create a loss with self-employment because you have to buy it?
Right.
There's always these things to consider.
I seem to remember, I don't know how many years ago it was, but there was like there must have been like a round of audits or something like that, where all the freelancers were either forced or encouraged to go on payroll as opposed to submitting an invoice and just getting a check cut, and I think that's what started it all. I really don't, at least in New York,
I,
I really don't remember
I can tell you
specifically.
what I believe it is. Okay, you got to think about it from an employer's point of view, and I think this is why the production companies don't want to mess around. That if I'm going to
Mm-hmm.
not put you on payroll, I don't even want to hear that I'm giving you a 1099. I want you to be an S-corp, that your regular business.
Yeah.
I believe that's where it's coming from. So I don't think it was a matter of audits. Okay, so it's always advantageous for an employer to pay somebody as a 1099, because number one, they don't have to pay the other half of the self-employment tax. Number
Mm-hmm.
two, they don't have to pay state unemployment insurance, which are payroll taxes that employers have, which we're not going to get into. Number three, they don't have to offer you benefits. The biggest thing that's been going on now over the last 2 or 3 years is Uber drivers.
Yep.
Uber didn't want to put them on W-2s. They are absolutely 1,000% employees. I don't care what they say, but they're
Mm-hmm.
powerful enough that they get, because think about the cost that Uber would have to incur if they made all these people employers. They have to
Right.
offer them
Exactly.
benefits. They'd have to pay the payroll taxes, the workman's comp. So anyway, maybe that's where it came from. But so you listen, I tell my business clients, you better be damn sure that if you're hiring somebody and they're an individual, okay, that
Mm-hmm.
don't think you can pay them, $500 a week, even if they give you an invoice, because they're not stupid. Okay, and we also have IRS issues from the FICA tax, unemployment insurance. What if this is advice I give to employers, that, oh, I'm working for them, and now I'm laid off because there's no more work, and then they go to unemployment to file for unemployment,
Mm-hmm.
and they say, well, I work there, and they're going to say, well, I have no record of you being on
Of you
payroll
working there,
because
yeah.
they didn't pay unemployment insurance, and now this exposes the employer.
Yeah.
It's cheaper to pay somebody as an independent contractor, but there's a lot of exposure, a lot.
Gotcha.
So, yeah. So anyway, that's from the employer side. We really want to talk about the
Being an employee. Yeah.
independent contract.
Uh,
Yeah.
a
The independent
question
contract.
came in, and I think it's relevant. It's from Renee. She was wondering what is the advantage to being an S corporation versus just being freelance and invoicing with a 1099.
Yep. Great question. And here it is. So we're going to get back to this self-employment tax, and just Renee and everybody else, just accept what I'm going to tell you. Don't try to figure out the logic of the IRS because it makes no sense. So yeah, no, it really doesn't. These are just, God knows how these laws got enacted, what congressman, what senator, it's who knows.
By committee.
So
That's how they
here's
got
what,
enacted.
yeah, by committee, right? Which I guarantee you somebody's constituent had an issue where that's how it got passed. Anyway,
They weren't thinking about you, Renee.
yeah. So Renee, so SCorp, what we can do is the advantage of being an SCorp. It's going to get a little bit into the weeds here. Is that you can control the amount of self-employment income you pay by being an SCorp, and I'll get into the weeds there. By giving yourself a salary, you become an employee of your own SCorp. I am an SCorp. Okay, I have income and expenses. I take a salary. I'm an employee of. I give myself a W-2. The law says for the IRS is that an S corporation. And okay, so let me just kind of step back so it kind of makes sense. If you have $100,000 in expenses, income, $20,000 in expenses, there's $80,000 net income of your S corp. I give myself a $60,000 salary, W-2 salary. There's $20,000 of income in the S corp left over, right? Did I do that math correct? Everyone get that?
Mm-hmm.
That $20,000 is not subject to that self-employment tax, that 15.3. Okay? So that's your advantage. Now, it's not as easy as that. And this is always the question I have, when people say, hey, David, should I become an S-Corp? And the first question is, now we're going to get into states. Is your business in New York City? We're up here in Westchester, so a lot of business here in New York City. Yes. Well, New York City doesn't recognize S-Corp, so you lose that flexibility. Are you in California? California has an additional S-Corp tax. Ain't great. Philadelphia, if anybody's from Philly, I apologize. They're doing everything in the world to to not open your business in Philadelphia. The city is broke. There are so many obnoxious taxes. Just the names are obnoxious. I think there's something called the business privilege tax in Philadelphia. Anyway,
It's a privilege to open your business.
Yeah, no. There's a tax. There's a gross receipts tax. There's an income tax, and then there's another tax called the business privilege tax.
Oh, it's so sweet. Yeah, it's the brotherly love tax.
That's nice. Yeah. Thank you. I'm going to go to New Jersey and I'll be. Anyway, getting back to Renee's question. So that's the advantage. Now, there are administrative costs associated with being an S corporation, right? Now you have to give yourself a W-2. Now you're an employer. It might be yourself. So again, you're going to get that salary, which your company is going to withhold, and you're going to get net payroll taxes. Well, now you have monthly, quarterly, and annual payroll taxes to file. Now, if you're the only, so there's administrative costs. Now you have to do an S corporation tax return and issue the K-1 that flows to your personal tax return. Again, as opposed to being a freelancer, it's just a single form that goes on your additional tax return. Now, here's where it gets a little bit crazy. So if you think about it, okay, I can control the amount of salary I give myself to pay the least amount of self-employment tax.
Mm-hmm.
Okay, you wish the IRS would be clear and concise, and there has been a lot of lobbying towards it. The IRS said, so the advantage would be say, the lower the salary I give myself of my S corp, the lower the taxes are. So why wouldn't I do that? So if I made $100,000, I'll only give myself $20,000 because I can save myself and pay tax on 80 and the rest. Well, the IRS says there is no dollar amount, there is no percentage, there's no industry standard for what you are. The IRS says that a more than 5% shareholder of an S corp, 2% shareholder of an S corporation has to give themselves a salary that's reasonable and commensurate with the job they do.
Well, that's certainly not open to interpretation.
Right. Yeah. Okay. Who can tell me anything different? Now, Now,
Right.
I believe I've had audits, IRS audits, and you could, I have met some knowledgeable IRS agents. I've met some who I wouldn't probably have to gum from, but forget about that. But I had an issue, and I said to like, hey, what do we do here? What is this number? And and she goes, what did she say to me? It's a pen.
Yeah.
It's the circumstance, right? I told her what I do based on a certain amount of income,
Hmm.
for certain people. And she's like, you're okay. You're okay. Just don't do something stupid that if it's going to get, just like anything else, it's got to be reasonable and necessary. The instance that I gave, I'm not going to give numbers, but client was an SCorp, didn't give any salary. Turns out the owner of this SCorp was 82 years old. There's a lot of money in it. Don't ask. She said she wanted to come back and say add 100, I think 100 or $150,000 of W-2 income. Now, keep in mind this is 2 years after the fact. It would not only the taxes would have been late and there was penalties and interest. I said she's 82 years old. I said, how are you going to tell me she's on this corporation in name only? And she said, you're right. So we knocked it down to $75,000. So anyway, that is what So and again, so let's get back to, should I be an S corporation? If you're only doing $60,000 in business, I'm telling you right now, the additional, you have to get workman's compensation insurance. By the way, every state requires workman's compensation. So these are additional expenses on top of payroll. So you got to think about that. So I usually, in your guys' case, and depending on the business, there's probably another 11 to 12% additional between FICA tax, state unemployment insurance taxes, and workman's compensation to add to the gross salary. And then there's the administrative cost of processing payroll.
Hmm.
You have to do, whether it's you hire Gusto or ADP or anything, but now you have to process payroll. There's going to be fees for that. There's going to be accounting fees to now prepare the corporate tax return, to provide the S corporation return, to do your personal return. So maybe at $60,000, no. Maybe if you're doing $200,000 a year, yeah, it's probably worth it because I can give myself, where if you were a 1099 self-employed independent contractor and you had $200,000 worth of business, let's say 50,000 in expenses, you are paying the self-employment tax on that whole 150,
Hmm.
right? As opposed to if now you're an S corporation, I can give myself a $65,000 salary and only pay the self-employment tax on that,
On
and
that.
the difference of the other $65,000 is not only not subject to self-employment tax, but there's also something called a 199 deduction, which, by the way, you get when you're 1099 as well. So anyway, it depends, Renee. How's
Right. I was
that?
going to say,
But
Renee, the answer to the
those are,
question is it depends. Yes.
but I'm trying to
Yeah.
give the ideas of when you might, when you might. Those are the advantages. If you do
Yeah.
a certain dollar amount of business. Now let's take that a step further. Okay, of, like I said before, what if you have a job, you get this great gig as an employee, and you're making over $150,000? Then there's no reason to be an S corporation that year because the FICA tax again is being paid by another corporation. You don't
Hmm.
want to give yourself salary because you'll get your employee portion back, but you won't get the employer because
Right.
they
I
don't
hear
know
you.
that you work for somebody else. So anyway, that's where I'm getting into. It all depends. It all depends. And
Right.
by the way, it varies from year to year. So anyway, that's
Yeah.
where we are. So I hope
Cool.
I answered it and didn't confuse people too much.
It depends.
It
Uh,
depends.
that's the answer.
Yeah.
Yeah, no. Next question is, so like I live in New York, right? This is a question about
Yep.
remote work, right? I live in New
Right.
York, and I work for companies who are located, well, anywhere. So if I'm working for a company, let's say that's based in California, and they put me on payroll, they put me on there, and I'm getting a W two
Yep.
from
Very,
them,
very big distinction. Yep. Yep.
right? And am I
Yep.
paying California taxes? Do I have to file in California? Do I get those refunded at the end of the year?
You know what the answer is.
That's why it depends,
Depends.
right?
Yeah. Here we go. This is what it depends on. On a serious note. On a serious note, if the California company does not have any offices, what's called nexus, business relationship with New York,
Hmm.
okay, they don't have offices in New York. They don't employ people in New York. They don't pay rent in New York. Then the answer is yes. You are subject to California non-resident income tax. Again, We live, guys, we live New York, New Jersey, Connecticut. We deal with this stuff all the time.
Yeah, that's
Okay.
true. That's true.
We live in, and by the way, this happens in other states as well, where you're living close to a border. So it'd be the same thing as California. Obviously, it's coming up a lot more now. Okay.
Hmm.
So if let's just stick to the California thing. So if your company doesn't have a office, a business next, they don't employ people in New York, then you will file California non-resident income tax. Okay, they will withhold California tax. They don't care where you live. You're working, even though you're working here, you're working for a California company.
Company.
If they have a New York one, they're going to say, "Don't worry about it, Andy. We know you're working at our New York office, and we're only going to withhold New York taxes." So let's go back to if you work in, they don't have a business nexus. They're going to withhold California taxes. You are going to file a non-resident California return without getting too deep into that. You're only going to pay, the way it works is if you have other income and so forth, they're going to calculate your taxes if you live there. And then they're going to allocate it, prorated based on your California sourced income. Whatever that percentage is to your total income to your California tax, that's your California tax. They're going to compare what was withheld on your California W-2, and you'll either owe a few bucks or get money back. That's step one. Now,
Hmm.
step two, you live in New York. New York doesn't care where you worked. Okay?
Right.
You're a resident of New York. Well, and
Yeah.
this is all states.
It's true for it's
They
true.
don't
Like
care
if
where you
I know
work.
for people who live in Jersey and work in New York, it's the
Right,
same thing.
same
Yeah.
thing. They're like, great, you know. So New York is
Good
going
for
to
you.
say, okay, I don't get good for you. It's exactly right. Now you don't get screwed. What happens is you file your tax return in New York on all your income, and they're going to say, this is what your tax liabilities. Oh, you pay tax in another jurisdiction, state. Subtract that from what ours is, and pay us the difference. So we're talking about two high income tax states. It's when you get to New Jersey and in Connecticut compared to New York, you're going to get screwed if you're a Connecticut or New Jersey resident and work in New York, because you would be paying less tax if it was a Connecticut or New Jersey company.
Hmm.
It's going to wash itself out, California and New York. So I'm going to tell you right now. Okay, this is only for employees, but let's think about anybody who lives in. There's 9 states that don't have income tax. Let's just use Nevada, Florida, and Texas. Let's say any one of those people as an employee work in a California company and they don't have a business nexus in any of those states, in the state in which you live. Now you're screwed, because I'm living in a state that doesn't have an income tax, but I'm working for a state that does.
Hmm.
That kind of thing. So you'd be still subject if they didn't have, if this company that hired you as an employee, and this is coming up a lot of the time.
Yeah.
It was issues before the pandemic, remote working, because there's a lot of people get hired. It's even bigger now because a lot of people are hiring. So I've had clients that are hiring somebody in New York that are saying, "Well, David, they live in Texas," and I'm like, "That's great. We don't have an office in Texas. You want to go open? You want to start filing in Texas and do them a favor, right? But now you got to start filing in Texas, set up, get authorized to do business in Texas, file Texas unemployment insurance for this person, file there's SCorp returns, but now you have to start doing all this stuff. Otherwise,
Hmm.
that person is subject to New York taxes, and so that's where if you're living in a tax state, you never get taxed in the same money twice. And by the way, we can get there if I'm going into. No, it's really not going to pertain to people who don't live in the United States. It kind of pertains to people, U.S. citizens working abroad. It's kind of the same.
Hmm.
You never pay tax in the same money twice on the state level.
Gotcha.
Additional filings, no two ways about it.
Maury had a question. What about if your S corp is registered in Delaware or something like that? Do
Yep.
the same kind of annex rules apply?
Yeah. Here's what happens. The reason you're talking about where your legal entity is set up, and somebody decided to do Delaware. It's all well and good. The reason people have done Delaware, sometimes Nevada, sometimes Alaska, is because you don't. I think it has to do with, I mean, going public. Number one, the securities laws. Delaware was the big one for that one. Number two, there's no public information about who the incorporators are. It's anonymous in Delaware.
Hmm.
So let's say you have your corporation. You formed your articles, your legal structure in Delaware. Besides the fact, the question is, where is your S corp doing business? if Maury, if you live in New York or New Jersey or wherever you live, it doesn't matter that you're a Delaware corporation. You have to get authorized. It's great. New York will recognize you. Are you in good standing in Delaware? Terrific. You have to pay a small fee, and now you're a New York corporation, and you have to make all the S corporations, regardless of where you. So let's say you move. Let's say you formed a New York corporation, and now I'm moving to Massachusetts. You don't have to close your New York corporation and open in Mass, which is a big pain in the neck administratively, and opening up different accounts and getting a new tax ID number and re-registering. Make life easier. Leave your New York corporation. It's no longer doing business in New York, so you don't. I'm not obligated to file taxes in New York. Just get it it's a certificate of authorization to say, hey, I got a New York S corp. I want to do business in your state. That's what all these big companies do. Think about all. Let's just use Target, whatever. They do business in every single state. So they're. I guarantee you, they're a Delaware corp, and they just are authorized to do business and file taxes in all those different states. So you can. Doesn't matter. You're a Delaware corp. It's where you do business.
Gotcha. Big takeaway from this. David recommends you do not move to Massachusetts.
No, no.
Go ahead. No, I'm kidding. One more question before we go international. Actually, let me do the international first. So we talked about the annexation. We talked about if you're doing work in a different state. What if a company in another country wanted to hire me as a freelancer, or vice versa? What if I wanted to hire another flame artist who's based outside of the United States? Are there any considerations?
Yeah, there's a couple. There are two mutually exclusive situations. Let's go when somebody hires you in Europe to do something, and I assume they're going to hire you as an independent contractor, or they're going to contract you out. You're a resident here. You don't care. You're not shipping anything. I don't believe. I can't speak of. Let's just use England, please, or Spain. I don't really care because I just have clients who do that kind of stuff. If you're doing work for an English company, I know there's VAT taxes in England and in Europe. I don't think any of that pertains. I'm not going to speak to I don't think you have any filing obligations there as a U.S. citizen. You're being retained, and you don't care where the money's coming from. You're obligated to U.S. taxes just like it's anybody else.
Okay.
And again, I don't want to speak to going over. There's a big difference now. If you go over and do work, okay, you might, and I can't speak because I don't know what these laws are. If you go work for a company and be an expat, or even if, let's say, they hire you as an independent contractor, but you need to be there for a certain period of time, then you got to go look at that country specific rules, visas and taxes and stuff like that. But let's say, for example, you did go over there and you paid British taxes or Spanish taxes or whatever it is. By the way, you're still obligated as a U.S. citizen to file U.S. taxes and pay income on that. However, again, whatever taxes you pay to that other country, you'll subtract from it's called a foreign tax credit. Not deduct, subtract, which is a dollar for dollar subtraction on your income tax return. So that's if you, as a freelancer, work for a company overseas. Different story. And again, I'm not going to speak to a UK resident or a Spanish resident. Now again, I'm talking, I don't want to speak to your obligations to file in the U.S. There are forms, which I believe it's called a 1042 forms, and I haven't really done much of that for clients because usually they're going to pay a company. But if they pay individuals, there might be, again, now we're talking about the UK resident who's working for a U.S. company. And if the U.S. company might issue you what's called a 1042, which is the foreign version of what's called a 1099. Now you're going to have some filing obligations to the IRS as a non-resident. But that's going to be, you guys got to determine if that company that's hiring you or retaining you to do work is going to issue you that 1042. So that's really, I don't want to go any further than that because I'm not really that well versed in it. It's another side of it. But again,
cool.
You wouldn't be subject to state taxes, but you might be. So find out if you ever get retained, guys, in Europe. Hey, are you going to be issuing me? There's going to be, I think it's the form is a W-8 or W-8 beneficiary, which is somebody who is not a non-U.S. resident is going to be paid by a U.S. company, and then you got to ask what the filing obligations might be.
Gotcha. Before we go on to another topic, there was a question here from it looks like from Rolf about the SCorp example you were giving. He says in an SCorp
Yeah,
situation, how do you access the extra money outside of that 60,000, for example, salary, without raising any red flags?
got it. So that additional income after your salary is called, let's call it K1 income.
Okay.
Okay. That's the income over the expenses, including your salary, that you're going to get a K1 from this S corp, and that K1, I'm not addressing the money yet. Okay, gets reported on your individual income tax return, and you're going to pay income tax again, not the self-employment tax on that additional income. I'm sorry, whether you take the money out or not, you're paying tax on it. The actual distribution of that excess money, whether it's during the year or after the year, is not a taxable transaction. So you can take it out whenever you want. It's called a distribution. And
Okay.
that is not the taxable transaction. The income itself is the taxable transaction. So there is no throwing up any red flags.
We're going to give 10 bonus points to David Kreitz, who put in the chat as an answer to Rolf. You
There
take them
you
as
go.
distributions. David Kreitz, you're like a Renaissance man in that you know everything when it comes to running your own business.
He's on the money.
That was well. That was like on brand, David. That was great.
Thank you. Thank you.
Question for you. Again, for people who are like transitioning from being an employee to being self-employed, I know like you were talking about things like the FICA tax and things, the payroll taxes.
Yep.
I know that like two big things that were covered by my employer when I was employed were health insurance, and then
Yep.
also like 401k, like some vehicle for putting money away for retirement. As someone
For
who is now
retirement.
self-employed, what are some of the considerations for those two things, for health insurance and for
Okay.
retirement planning?
Yeah. So health insurance, it's a business expense. I'm not going to get into it too much. It's different than a normal business expense. It's different from an S corp. It's different for a Schedule C, but it's deductible for income tax purposes, not for self-employment tax purposes. Depending on if you're a sole proprietor or a single member LLC, it's deducted on your tax return below the line. If you're an S corporation, well, I'm not even. The bottom line is deductible in the same way. Okay. Now the difference might be it's going to be a hell of a lot more expensive. We know what's going on with health insurance.
Oh
It's
wait, I'm
just
sorry. So when you say
crazy.
deductible either way, you mean right? When I was self-employed or when I was employed, those two
Yep.
things, my 401k contributions and my health insurance contributions, were done pre-tax. So
No, no. Sorry, Andy. I
okay,
apologize. The 401k, your retirement was pre-tax.
yeah.
The benefit that and it could have been. Did you contribute to any of your health insurance? Let's talk about that.
Oh yeah. I mean yes.
Okay. Was it a HSA plan or an MSA plan, or was just
No,
they
it was
took it
straight up.
out?
It was
Okay,
just
so
yeah.
so no, when I said it was deductible, health insurance is deductible when you're self-employed, either as an S corp or
Right. Okay.
as a
I'm sorry.
self-employment.
What I meant was that it was something that I was always paid for with pre-tax dollars, and now I'm not. When I was employed, at least I thought I was.
No,
No.
nope,
Oh, I should
nope.
speak to my
If it
accountant then.
wasn't an no, if it wasn't an HSA or an MSA or a cafeteria plan, then your contribution to your monthly health insurance was after tax dollars.
Oh
It
wow.
was deductible. Yes, it was deductible to the employer, your company, because it was a benefit that they provided, and I made the
Okay.
assumption that when you're self-employed, either as an S corporation or a freelancer, that if you have to now pay your own health insurance, the full amount of that premium, it's deductible, not against the self-employment tax. It's a different calculation, but it's deductible as a business expense. Now, so I hope that makes sense to others.
Yeah.
If some employers have a cafeteria plan where it's a different type of plan, it's set up differently. Now, Andy, if you were to participate, if you had to pay a certain amount of monthly premium, that would be pre-tax. But if it wasn't any of those plans that I talked about, your part of the premium was after-tax money. You don't
Gotcha.
get a
Okay.
deduction for that. Only as a business expense. So that's that. Retirement. Okay, you worked as an employee for a company, and what you had was called a 401k. There are so many types of different plans, retirement plans. If you're an employee, if you're an individual, if you're a corporate, there's different types of there's something called a profit sharing a defined money purchase plan, a SEP, which is a simplified employee pension. Okay, there's all these things that you can do that would be different, by the way. A 401k is you need a lot of employees to make it beneficial because there's a lot of administrative costs.
Okay.
It's another way to give opportunities for employees to put money tax deferred. You can also match as an employer, right? Usually it's 2, 3, 4%, which is an extra bonus and incentive to keep employees, happy. But there's third party administrators. There's not only the additional cost to maintain it and so forth, but there are other retirement plans that you can have when you're self-employed. One of them is a SEP. It's an acronym, Simplified Employee Pension, which is the best way to do it. And by the way, it's based on your income. It's 20% of your net income that you can put away. It's more complicated than that, but we're just going to leave it at that 20%.
Depends.
Yeah, with that 20%, which maybe there's every year it goes up depending on your age for a 401k. But it's 20% up to the maximum. I think this year is $58,000. Goes up like by $1,000. 20% of your income up to $58,000. It's great. It's flexible. Now again, when you're self-employed, not when you're an employee, right? And by the way, if you're an S corporation, your W-2 income doesn't take part in that calculation. It's only your K1 income.
It's only your
so
K1
you might be limited, but it does allow you to put more money away. It's very flexible. You can put it away up to 10 months after the year end. Okay. It's a great thing to do. I'll tell anybody, I don't care what age you are. If you have kids, if you're married, what you do is the answer is, or if you're working for somebody else, the answer is always, hey, should I participate in this retirement plan? Whether it's a 401k, and the answer is you put as much away as you can afford to put away. Because it's tax deferred money. There's Roth stuff too, which is even better, which is tax free, but it's done with after tax money. But yes, you shouldn't go borrow money on credit cards to fund your 401k. Yes, it's terrific because I get a tax deduction in the current year. Whatever those assets, my investment, grow into or throw as income, you're not paying tax until you retire. So the answer is always, this is a definitive yes, right? To put as much money, and here's where it's not definitive, as you can afford to put away. So yeah, that's the kicker. And so yes, you can do that being self-employed as well. You have a lot more options. You can.
Gotcha.
And by the way, SEPs are discretionary, meaning you don't have to fund them every year. You don't have to fund that 20%. It can be up to 20% every single year. So it gives you a lot of flexibility.
We only have a few minutes left, so I wanted to ask you about expenses as a freelancer, as someone who's self-employed.
Okay.
What kinds of things? There are things that I kind of assume that I can deduct. I had to buy a computer for work. Okay, I can deduct that. Right. But what are some of the other things that I should consider that maybe slip my mind?
Any expense, and I'm going to get more detailed about it. Any expense that's incurred that's reasonable and necessary, that's what the IRS says, right? To maintain business or generate business is deductible. It has to be reasonable and necessary and needed.
Gotcha.
You don't necessarily need to have income. So let's talk about it. Now, the two things we got to talk about, and I'm sure there's going to be a third one, which is going to be office and the home deduction, which was relevant before the pandemic and even more relevant this year. What's wrong?
No, I'm looking at the office in my home right now.
I'm
thinking about how much. Yeah.
There you go. I missed that part. Sorry. But let's talk about computers and cars. Okay, travel expenses. The IRS defines these two things as what they call listed property that has both personal and business use. Okay, to the letter of the law is that to be even deductible at all, this car or this computer or this phone, needs to be used more than 50% for business, and once to be deductible at all, and then it's got to be prorated for business use.
What does that mean?
This is the letter of the law.
Okay.
So I mean, that's how it's defined. So yes, if you need to buy a computer, obviously, or software, it's 100% deductible. Now, some people say, "Well, I bought a computer for my kid." Like, really, yes, it's a computer, but come on, where do we want to go with that? Let's talk about a car. Oh, my friend told me that they wrote off the car. What does your friend do? Well, he's in construction. Well, that makes sense because he's got to drive his car from job to job to job to job to
Right.
job.
Maybe haul some
Okay,
lumber in it or whatever materials.
correct,
Yeah.
or do something like that, or a delivery van. Okay, but
Mm-hmm.
so just because you're an S corporation and just because you're an LLC, right, and you have a car, doesn't mean that it's for business use. Now, there's what I'm going to give ways to get a tax deduction. Now, if you ever get audited, you have to prove with a log, who you went to go see, what you did there, even though as a client to get that number. Now, there are apps. What I tell people, if you have a car, you need to lease a car. Now we're getting to leasing and buying depreciation. Okay, lease the car. Now, by the way, if you're a corporation or an LLC, if you want to put that car in your business, it better be registered under the corporation name and not your personal name.
Mm-hmm.
And the insurance be there. If you get audited, they're going to say it's not a corporate asset. What are you writing it off for?
Right.
Before we
I
even
gotcha.
get to that kind of stuff. So again, that can open up. Just to kind of close
Yeah.
this part with the automobiles is there's apps. Okay, I don't care. Listen, if you're taking Ubers or Lyfts or Curb, I don't care. Just you got a record of it. Just tell the client you went to, fully deductible. If you're driving your car, use an app to track the miles. The IRS has something called the standard mileage rate. I think they just raised it because gas is high. 58.5 cents per mile. So you can just take that number, keep track of your miles, and whatever business mile you use, multiply it times that 58%, and that's your auto expense. By the way,
Mm-hmm.
this is in addition to parking and tolls.
Mm-hmm.
Okay, we're talking about lease car, insurance car, wear and tear, gasoline.
Yeah.
So those are those two things.
But
And
it doesn't
before we
cover
get to the
like.
office,
Oh, never mind. Sorry. Go ahead. Go ahead.
no, ask.
No. No. I was
Doesn't
just
cover
remembering
what?
something, but it only applied to when I was an employee. Never mind.
Correct, different story.
Yeah.
Yeah. So let's put off for the office and the home deduction. So let's get back to any business incurred to generate business or maintain business. If it used to be meals and entertainment, now it's just meals. Okay. If
Mm-hmm.
you took a client to a Yankee game, I'm sorry, the Yankee game, not that game,
Right.
a Yankee
No.
game.
No. No. I
The
understand. It's
tickets,
biased.
yeah,
Yeah.
okay. The tickets, you're wrong. The tickets used to be deductibles and entertainment expense. They're no
Uh-huh.
longer expense. It's
But the
stupid.
hot dog
The
and beer
hot
at the
dog,
game is
correct.
deductible. Okay.
It's
Perfect.
deductible. It used to be at 50%, and now it's at 100%. So meals, again, you have to document. And by the way, what if you took a potential client there and never got their business? Still deductible.
Still
Okay,
document. Yeah. Right.
as a meal, got still
Mm-hmm.
deductible. All right. Let's. I'm trying to think of any other expenses. Obviously, rent, office supplies, any software. That's used for business, whether it's Google Sheets or what you guys are the flame stuff, the really expensive stuff. Obviously,
Mm-hmm.
those are all deductible expenses. I'm trying to professional fees. If you have to hire an accountant to
Mm-hmm.
do your tax returns, now it's deductible. To your personal tax return, no, but the business portion of it, yeah, that's deductible. Um, Utilities, your telephone, the same thing. By the way, just again, what I would do with the telephone, if you're self-employed, take 50% of it and don't, that'll always pass audit. You know,
Oh, okay. Right.
because
Don't do the
listen,
full
we,
thing.
we all
Yeah.
use our phone to text our kids, right? Which
Yeah.
technically is not deductible. Don't make yourself
Right. I
crazy.
hear you. Yeah. If you're not going to go down the route of having two separate phones, one
Right.
for business, one for personal, then
Correct. Yeah,
yeah.
yeah, please. Yeah, let's not make ourselves crazy.
Maury was
So,
wondering, can you deduct things like streaming services? Like we're in media, we work on movies, we work on TV.
absolutely, that was my next question. My next thing is, it depends. What's deductible? I have clients in the music industry.
Mm-hmm.
Okay, what their expenses are considered reasonable and necessary are going to be completely different than mine, or an actor, or you guys. You guys are in the. Can I deduct my Hulu expenses and my Amazon expenses and then my all that my Netflix? No, that's not the business I'm in, right?
Mm-hmm.
But that absolutely, I would take that. I have all my clients in the music industry. I put that as research expenses.
Mm-hmm.
Besides their subscriptions. Anybody in media, anybody in film, acting, all that kind of stuff. If you're going out on auditions as an actor and you have to buy a wig, you know,
Uh-huh.
uh, and
Are
you're
you
getting
trying to
paid.
tell me something, David? Is
No,
this
I'm telling you the same thing.
okay?
There you go. I got the same thing. Whatever that is, those are expenses.
Yeah.
Musicians, when they go buy wardrobes to go out and play, I can't. I have to wear a suit. I'm never going to wear a suit again. But if I had to wear a suit,
Right.
I'm not allowed to deduct those expenses. But if a performer has to go buy, to go perform on stage, or a newscaster has to go on, those expenses would be deductible to them, not to me. So
I
the
understand.
answer is, for the industry that you guys are in, it's a great question. The industry, yeah, streaming services would be deductible. To me, no.
What what about so like here I am in a home office. What about
Yep.
things that I share with the rest of my house, like the internet, like the electricity, things like that?
Here we go. So this is so when we talk about the home office deduction, and by the way, before the pandemic and before remote working, it was a highly scrutinized expense by the IRS. It's called an office in the home deduction, and let's discern between Andy's office in his house. I'm looking at his microphone. He's sitting in a chair. I see stuff yet, the microphone. I see all the other stuff, all those things there. That is not an office in the home deduction. These are personal properties, business expenses. Those are 100%
Right,
deductible.
even the puppet
When we
back there that
talk,
I have.
even the puppet, if you
Ah,
paid for it,
uh,
you know, those crazy puppets.
it wasn't a
Um,
gifted puppet. Yes.
as long as it doesn't freak anybody else out when it starts moving. But so those, they're not office in the home deductions. Those are expenses like if you have like a computer or a desk or a lamp or paper clips, whatever. Even though they're in your home office, don't confuse the two. When we talk about home office, is that the allocable portion of what we call it rent. Okay, let's say you rent an apartment and you use that office, you use a portion of that office to do business. Now,
Or the apartment, a
it's
portion of
about
the
four,
apartment to
the
do
apartment,
business.
yeah.
Yeah.
Now it's got to be used exclusively for business before we get there. It was just an abused expense, okay? Because people would work, and by the way, more people took it. More people are becoming more self-employed. There used to be unreimbursed business expenses as an employee, but let's not get there
Okay.
because that's no longer the law. But people, okay, oh, I looked up, I did something on the internet, so I'm going to take 15% of my apartment. They say it's got to be exclusively for business. I'm going to give an example. I hope it doesn't take too long. But there was a court case where a doctor had in his office employed people, kept charts. This is before electronic records. Had a woman, patients would call up, book appointments, blah blah blah. Took a portion of his house. The IRS says no. You worked in the hospital. You saw patients in the hospital. This was not your main place of business. Think of a psychiatrist who's got an office in the house where patients come to their house. They got a separate portion of the house, with a couch or whatever. So, wherever they saw patients, that's his main place of business. He's not seeing people there. So, anyway, those expenses, the proportionate expenses, are your rent, are your mortgage payments, are your utilities, whether it's electric and gas, or internet expenses. Now, again, let's get to the internet. Everyone needs the internet, but we know that's also used for personal. Take 50% of it. Don't even as an office in the home expense. But the other portion of it, if you guys pay rent in an apartment, now keep in mind, I'm going to go back to just because it's a very, and it's going to be even more scrutinized. Again, there's a separate form, okay, and they're going to want to say they want to know, give me the total square footage of your dwelling. Give me the total square footage of the area that's used for exclusively for business, and take that percentage times all your indirect expenses, rent, utilities, and that kind of stuff, and that's your office in the home deduction. Now, I can tell you right now, if you have a one-bedroom apartment and you say, "Well, I use my bedroom as an office," they're going to give you the square footage of the desk. If you have a two fridge, again, guys, we're only talking if you get audited, and I speak that way as if you're going to get audited. If you have a two-bedroom apartment and that two-bedroom apartment doesn't have a bed in there but only has a chair, a microphone, and everything else, great. Use the total
Yeah.
square footage compared it. It's used exclusively for business. Take that percentage. Now, when it comes down to it, like I'll say, okay, give me all that information. I'm preparing a tax return. It may not be worth it. You know, we're talking about, it depends what it is. Like, and by the way, there's the threshold. I guarantee you, if you use any more than 20%, it's going to be a big red flag.
Red flag.
The
Yeah.
form itself is a red flag in of itself. It doesn't mean, by the way, that if you get audited, you're going to lose. Okay, but it's a red flag. Who wants it? and you're going to have to prove it. And by the way, they're going to want to see it. And if you've moved, you better have pictures. We're getting to, auditing,
Yeah.
which nobody wants to go through. It's a hassle. It's a hassle. But anyway, are office and home expenses allowable? Yeah, they are. Absolutely. But these are the parameters. And it's not just as simple as saying, well, I'm going to take 50% of my rent. Don't do that.
Gotcha. Yeah, maybe that answers. Josh just asked the question. That was, is the rent deduction a huge red flag for an audit? And it seems like the answer is yes, right?
It's a red flag. Huge, no. Depending on the percentage, you put 50%, yeah, you're just opening yourself up. Again, just go by these parameters that I explained, and don't listen. A lot of the times you have to answer the question. Don't be afraid of auditing as long as you can win.
Right.
And winning, by
Yeah.
the way, guys. Just to let you know, people say, "Well, I have my bank statement, or I have my check, or my bill pay, or my credit card statement." It's not good enough. You buy a computer, they don't want to see your credit card statement. They want to see the computer is made out to you, right? They want to see the bill. It sounds stupid, but this one I kind of get. They want to see the bill, that it's made out to your name and not your sister's name, or that kind of stuff. You go out to dinner and are going to take a meal, write down who you had dinner with and keep that receipt. It's a pain in the neck. It's bookkeeping, but you do want to do that.
Right. Well, thank you, David. I appreciate it, man. We've run out of time for the hour, but this was absolutely amazing. Thank you for answering all the questions that people had and all the good advice. I want to share your email address. If anybody has any questions for David, you can reach him at david@kamenycpa.com. That's david@kamenycpa.com, and I'll put it in the show notes at the end. I wanted to close out here with a comment from Renee, which is probably going to fill up half the screen, but highly recommend people get an accountant. Don't play this game without help. The laws and rules change so often that even the pros are constantly checking the rule books. And Renee, you are 100% right. Maybe 110% if we're allowed to take the extra 10% deduction.
Every year. I appreciate it. It's smart. And it's a hassle. And by the way, you guys are creative and tech people, okay? It doesn't mean you can't understand this stuff. And you, like Andy, when you said, we're detail oriented, you're detail oriented in the creative space.
Right.
This is not creative. This is, so don't beat yourself up that, yeah, you're detail oriented, but this stuff is different type of details,
Yeah,
I'm
completely.
detail oriented too. I wouldn't know what you guys are, the first thing you guys are doing. So.
And that's why we work so great together.
Right. There you go.
Cool. Well, thank you, David. I'm going to see
guys.
you in a few minutes over on Zoom in the patrons chat. And I'm just going to wrap up the show here. We're going to do that by giving away a couple of prizes. Let's do this. Well, hey, friends. I've got 2 licenses of optics from our friends at Boris Effects to give away. So let's shuffle up the wheel here and see who our first winner is. It's over here, David Price. Congratulations, David. And let's spin the wheel one more time. More, congratulations, more. All right, and because it's been insanely hot here, we're going to give away a Logik water bottle. It's important to stay hydrated while you're making beautiful visual effects. Here we go. Spinning the wheel, and Andrew Rolfe, congratulations on the Logik water bottle. All right, friends, let's, we'll go here to the slideshow. Coming up on Logik Live, we're off next week, but coming up on Sunday, August 21st, we're going to have Women in Flame hosted by Amanda Elliott. Please tune in and support Amanda. I'm so excited that she's coming on board as a host here for Logik Live. And on Sunday, September 4th at 2 p.m., we're going to have the final installment of Summer of Flame 2022 with Jasmine Frenet of Autodesk. He is going to give the developer's perspective. So if you had any questions about Flame development, specifically from the development end, the programming end, definitely tune in. He's a great guy, and we had him on at the end of last summer, and it was an extremely informative conversation. If you haven't signed up for the forum, please do at forum.logik.tv. And while you're there, sign up for Discord and join the conversation. This episode of Logic Live is going to join all the other episodes of Logic Live later today. I'm going to end up releasing today's episode with David as a podcast, but for now, be sure to check out the podcast interview I did with Brian Bailey. You can get that on Apple Podcasts, Spotify, Stitcher, or anywhere podcasts are cast, I guess. We are over 1,450 subscribers. If you haven't subscribed already on the YouTube channel, please, as Randy likes to say, smash that subscribe button. I'm not quite sure what that means. And if you're in the Detroit area around August 18th, please head on over to the Detroit Flame User Group, Thursday, August 18th at 6:30 p.m. at Flavor. Thank you to all of our patrons on Patreon. If you'd like to support what we're doing at Logic for as little as $5 a month, you can become a patron by going over to patreon.com/LogicTV. Be sure to check out the merch shop. And if you're in need of tech support, call Jack Horrocks, jack@flametech.com.au. If you're in the market for anything from Boris Effects, be sure to use the Logic-15 discount code and save 15% at checkout. Thank you to AJA, and I want to thank our friends at The Hot Spring. They're the future of VFX outsourcing. Check them out at thehotspring.com. That's going to do it for today. Thank you very much, David Kameny, and thank you very much, everybody in the Logic community. We will see y'all next time. Have a great week.